Good morning, traders. I'm Michael Sabo, senior commodities broker here at RJO Futures. Coming to you on October 12th. It's a Friday morning, beautiful Friday morning here in Chicago. And, I'm going to talk to you here about the energy markets. As many of you know, this is what I do my commentary on here. Crude prices, let's get started here. Well, right now, we're just, it's kind of mixed market here right now in the crude. Currently, that November contract is up just a little bit, but barely on the day. We're up about 5 cents, around 92.12. Brent is weaker, down about 86 cents. I'm going to talk a lot about that spread. Spread kind of tightening up here a little bit. Give me a call if you want to talk about that spread. A lot of great opportunities there. That Brent contract trading around 114.86 right now. Taking a look at nat gas. Strong day yesterday. Saw that market up about 15 cents. Giving back a little bit right now, down about 2 to 3 cents. A little bit, I think, of profit taking going on there ahead of the weekend. We're trading around 358.20. The complex here weaker. We've got the RBOB down over 5 cents at around 290.5. And the heat's off a little bit there as well, off almost 3 cents at around 322.93. So seeing a little bit of weakness there as well. So what's going on? What's moving oil here today? Where are we heading from here? Well, first off, let's talk about the numbers that came out yesterday, the DOE numbers. We were looking for a build, if you recall yesterday's post, of around 1.5 million barrels, and it came in a little bit firmer than that. We came in around 1.672 million barrels. So seeing another build here in the weekly inventory numbers, but something I talk a lot about is the overall supply and demand pictures, which is, in my opinion, it's paramount. I mean, when you're trading commodities, this is classic, Econ 101, supply and demand. Look at our 1 year, compare our stockpiles right now to year ago levels. Currently, we're sitting about 28.7 million barrels more above year ago levels. Look at the 5-year average, we're at 33.1 million barrels above our 5-year average. So clearly, we've got some adequate supplies out there right now. That coupled with something I've mentioned in previous posts, Saudi Arabia's commitment to producing at least 10 million barrels of oil there a day. And as I mentioned in yesterday's post, I think this is important, they publicly stated they think, the price per barrel for Brent, they think a fair price for it is basically $100 a barrel. And as I mentioned earlier, right now Brent's trading almost $115, so $15 a barrel there. A lot of potential there, to see that spread narrow and to see some opportunities trading in that Brent. Now, granted, there is a little bit of more supply concern on the Brent than there is with the WTI, but nonetheless, I do think there's some real opportunities there. We also had EIA, as I mentioned before. They're talking about, again, reoccurring theme there. Lower demand for the rest of 12, lower demand for crude prices as we move into 2013. IMF, they've already come out publicly stated there, it was a front page there in Financial Times here earlier in the week about, global recession. And, my opinion of it is this. I'm a huge optimist, okay, but at the same time, you got to be a realist as well. There's definitely a lot of problems out there. So I do think you will see a little bit of that slowing, sluggish demand for oil prices. Ultimately, I think here as we look at the big picture, I do think crude prices will come down here a little bit more. Now, looking at the technical side of things here, because I think a lot of the market is taking, that's the way the market is trading right now, and taking that into account, I think, take a look at yesterday's price action there. Great action in the market, inside day. Again, here today, so far today, we've got an inside day, and that tells me here that we're seeing some market consolidation in the market. In that November contract, I think take a look at the chart. Strong resistance around 93. We poke up around there, a little bit through it here, but we keep coming, back down here. So, that's not to say that level's going to hold forever, but I do think we've got good resistance there. I believe that the market, based on the fundamentals as well as the technical picture, that the market is going to be heading down to around $90 a barrel, possibly crossing through there, maybe even getting as low back down to around that $88 area. And if we are able to take that out, we could be moving down to $85 a barrel. If you're a bit of a conspiracy theorist, think about this. Elections right around the corner. Gas prices still stubbornly high at the pumps. And of course, if you're running for re-election here, you'd love nothing more than to see gas prices start falling as we head into that election. That's something that affects everybody. So we'll see where prices are heading at from here. Keep in mind, we do have serious, conflicts going on in the Middle East that could heat up even more. So there is some risk premium in the market, and that we could see an increase there. But short of that, I think, focus on the downside in crude oil. That's my opinion. Obviously, you've got to use good risk management strategies and techniques. Give me a call at the number or shoot me an email. I'll be more than happy to get into more detail and we can go over that. Of course, remember that futures trading does involve a substantial amount of risk. May not be suitable for all traders. Good luck and good trading.